And in a Bloomberg exclusive, I'm joined now by British Land CEO himself, Grigg. For more on this, thank you very much indeed for taking the time to speak to us. So property prices and rent seem to have recovered since August of 2009. You seem to be back in profit at the moment, but do you think this is set to continue?
Yes, we feel good about the market looking forward. We've obviously seen plenty of volatility in the course of the last couple of years, but things have stabilised for the best sort of real estate, the best sort of property, so we feel much more confident.
And I understand that you said the value of your shopping centres, this was in August, just a couple of months ago, you said the value of the shopping centres and offices grew at a slower pace in the past 3 months as the economic outlook worsened. I mean, those concerns remain, don't they, as austerity measures, government cutbacks really start to bite next year?
Look, I mean, we're not sanguine about the future economic environment, and that would be a silly thing to be. On the other hand, what we've seen is our occupiers taking a longer-term view, and that's true both in our retail business, in a shopping business where people are taking new space in the best schemes, and also in our office business where occupancy levels have increased substantially over the course of the last year or so.
And you think that will continue to be the case? Occupancy levels will remain high well into 2011. What's your pessimistic scenario?
I think our pessimistic scenario is obviously with respect to a bigger fall in consumer spending in particular during the course of next year. On the other hand, what we've continued to see is for the best sort of real estate, the best shopping parks, the best shopping centres, then actually consumer spending has held up pretty well.
Now, as you were saying, British Land has revived the plan to build the Cheesegrater Tower in London's main financial district. Have any tenants been lined up for that?
Not at the moment, but we're confident about the overall tone of the market. There will be a shortage of new space available in the city, and indeed central London generally over the course of the next 2 or 3 years, and really we're building into that expectation.
And of course, when we speak about shopping centres, again, I go back to this issue of budget cuts. Many people saying, analysts saying, things could get much more difficult next year with government tax increases, unemployment, bound to impact on just how much consumers are willing to spend.
There could well be an impact, and as I say, we're not expecting no impact. But on the other hand, what we do know is that retailers want to be in the space that we own, and we've said a number of times that we expect some divergence between the best sort of retail experience, wherever that is in the country, and some other areas which we feel continue to be pressurised by what you're talking about.
Can you tell me a little bit more about those areas that will be pressurised? When do you think you might push the button on development projects outside of London?
First of all, we are already looking very seriously at retail developments in various parts of the country, often in our existing parks where we'll be doing extensions, sometimes putting in mezzanine levels, sometimes actually adding ground floor space. And really it's a case-by-case basis. So we'll look at schemes around the country. We're looking seriously at Glasgow, for example, at the moment. We're looking at something in Hampshire. So it really spread all over the country.
And when will rental growth start kicking in to justify the jump in property values that we've seen over the past 18 months? It's interesting. What we've seen in central London is quite steep increases in the course of the last 6 or 9 months. So to give you an example, in our development in the West End, we've seen something like 20% rental growth in the course of the last 9 months, which is obviously pretty dramatic. If you look at our retail business, what we have seen is stabilisation over the course of the last 3-6 months, actually moving upwards, albeit gently, in the course of the last quarter. So that's a positive sign. Grigg, Chief Executive Officer of British Land, the UK's second largest real estate investment trust. Good to talk to you.
Many thanks.